Hey everyone, welcome back. It is Tuesday, March 5th. We are having an awesome day. I hope you're having a great day. A little bit of a technical issue to get me started for the day, but it seems to be working now. If somebody could confirm that, that would be fantastic. I see Kevin is on. Happy belated birthday, Kevin, from Lakeland, Florida. Always nice to see you here in the chat. And Kyle, thanks for joining from San Pedro. Hey Jamie, thank you for letting me know that that's all good. Anybody that hasn't joined me before, as always, what I'm talking about here is not financial advice in any way, shape, or form. Oh, my buttons still aren't working today. I gotta do this manually, which is a bit sucky. Where's my disclaimer? Not financial advice in any way, shape, or form, and just my opinion as to what we're doing. This is open discussion. It's open to the public. I do have a Discord channel that I do public or private chat for members only over on Patreon. So if you guys are interested in that, you can hit me up over there. Lots of good trades on, fairly delta neutral in this current environment right now. Looking, to take small trades. We're waiting for Powell's speech tomorrow. That's going to potentially move the market either up or down. Of course, we're looking for what's going to happen with interest rates. That's kind of the big thing coming up in the future this year as to how many rate reductions the Fed is going to have. Now, I'm in Canada. We do quarterly rate reduction or rate reports. Bank of Canada next week expected to hold the current rate. Now, interesting news yesterday from New Zealand. Their Reserve Bank held rates last week. So they kept the interest rate at the level that it was previous. But two of the major New Zealand banks yesterday on Monday lowered their rates for their customers. Now, I follow these interest rates very closely. You guys know I've done videos on mortgage rates before. We are in a very high area of rates right now relative to the last 20 years. If we look at interest rates over the last 20 years, we're in a relatively high period. In 2020, we had the lowest rates ever. So for mortgages specifically in Canada, especially, I think we're going to cycle down next year. I think we're going to see the banks cut further than the Bank of Canada is actually suggesting. So something to think about, something I've been thinking about quite a bit, and it does affect us. Now, how can we play this? One of the things that I think about is small cap stocks. If we look at like the Russell 2000 index, let me just pull up something. Oh, again, my buttons aren't working. It's going to take me a while to get used to that. Let's take a look at, what have I got going on here? This is not what I want to show you. Wrong thing. Sorry, just give me 1 second here. Let me just zip on that. What I'm trying to pull up here is a window of Yahoo Finance, and then we'll take a look at the Russell 2000 index, which one of the easiest ways to trade it is with IWM. I hold IWM in my account. If we look at the 1 year chart, we're not up massively comparatively to like SPY. If you were to look at the S&P 500 over 1 year, it has been a huge return from 3,800 to 5,000. This doesn't show the percentage. Why am I using this? Let me look at something that actually shows us some information on percentage return. Yahoo, do better, please. IWM. Let's look at IWM. If we look at the 1 year, it's up 8%. If we compare that to SPY, which is S&P 500, it's up 25% 1 year over year. So the IWM, part of the reason why it hasn't had this massive move to the upside is because a lot of these companies, the small cap companies, require lending. They're borrowing rates at the interest rates, so it affects them quite a bit. Now, when this comes back, when the interest rates come down, which I expect that they will, I believe that we're going to see some bullish movement in IWM. Now, there's ways to play this. If you really want to get aggressive, we can play the stocks like TNA, and which is a 3 times bullish share. One of the things that happens with this is that over time, it actually has quite a bit of decay. TNA hasn't done too bad. But usually with these 3x leveraged funds, over time there's a bit of decay that occurs because, of course, and I've talked about this before, when we have a product, if it goes up and then it goes down the same percentage, we actually end up with the decreases being larger than the increases. When we're using a triple leveraged fund, that is even more extreme result. So if we look at, let me just go back to TZA, and you'll see this with any like futures trading stuff as well, anything that kind of has a leverage. But if you were to pull up the 5-year chart, these basically have a value that just depletes forever. So, you know, you don't want to be holding these. Or my arrows aren't working either. Boy, just nothing seems to be working today. That is no good. I don't even have arrows to show you. You got to rely on my mouse being just big. I'll just shake it around. The stock just kind of goes to zero with these triple leveraged shares. So short duration. Luckily, there's lots of premium in the calls. So if you're willing to take the risk, then these can be pretty decent for an annualized return. I am totally open to taking questions. So if you guys have questions, please just let me know. Hey, David, I see you're joining from Pasadena. Please let me know what stocks you want me to look at. We'll load them up. We'll look at them in Options AI. I will pull up some potential trade ideas and we can take a look at that. I am here for the next 50 minutes. So any stocks you want to talk about that would be great, just put them in the YouTube chat. Let me know. I'll give you guys a few minutes to do that. And I will be right back. Okay, I'm sorry, I'm trying to get this fixed so these buttons work, but I seem to be, I'm gonna fumble through it. FL, so mate, Greg is asking about FL. Let's take a look at what FL is. Is that Foot Locker? I feel like we're talking about Foot Locker. FL is not one that I trade very often. So Foot Locker. Over the last year, 21% down. We saw the lows in August of last year around the 16, 17 mark, has been coming up nicely to this 34. The quant rating right now, if we look, again, my arrows aren't working today, but if you look over here, the factor grades, profitability D+, they're not making very much money. This is where I try to avoid these companies when I don't see profitability in high interest rate environment. If they have to borrow anything to keep their business afloat, I don't love it. Quant ratings a hold. If I was gonna trade something on this, I'd probably trade it to buy, make some money if the stock dropped at all. So let me pull up the option chain here and we'll take a look at what might be possible. So I'm gonna pull up Foot Locker. This is Interactive Brokers. These trades can be done in any type of account. So or any brokerage. I'm pulling up the strategy builder, and typically we're going to look out about 30 days for new entry. So we've got like April 5th, April 19th is a 45-day mark. That's probably a nice place to just look for potential trade ideas. So let's look at a little bit tighter spreads in here. Something's being slow with my data. You know what? It's amazing when you've got like technical things going on, and then that's seemingly it just kind of spills down into everything, doesn't it? Look, I've got nothing loading in my watch list right now. I have no idea why. I'm gonna switch over to Wi-Fi and see if I can get a better signal here, better fill. Yeah, there we go. That popped up. Okay, so if we were looking at the April 19th, 45 days, typically if I'm doing something, I'm looking for about a 1% return every 30 days. So on a 45-day cycle, I would want to collect about 1.5% return. The 25 put, just by itself, returns 2% on cash secured value. So if we do the rough math on this, the return on this is $50. The max loss is $2,433. So a 1% return would be $24. Obviously, this is $50, so it's a 2% return on risk capital. There is a delta, it's a delta of 0.098, which means there's a 91% chance. And you can see that right here. If you look at this 90, that's what is giving us that number, that delta rating right there, or the delta value. Now, one of the things that could happen with this, of course, is that we could see that position sell down, and there could be a fairly big major move. So we have to take a look and say, what is there earnings coming up? Like, what is going on with these particular stocks? And let's just take a moment to move. So earnings are coming up obviously next week. We've got a 29 expected move from March 8th. So the earnings, if we scroll down here, this is options AI. If you take a look at earnings, we've got March 6th before they open. So this is an earnings play. If we are taking it, we're going to have to hold through earnings. $29 is the expected move next week, which is a 15% move. But that's why there's so much premium in that put. Now, because there's so much premium in there, we could possibly play a much shorter date. We could say, well, what if those earnings are coming out tomorrow morning? What if we decided to look at the 25 put that expires next week instead? This still makes 1%, so $25 on a max loss of $2,471 if the stock stays above $25. Another thing I like to do for earnings is try to build some sort of credit that is equal to this with a profit spike to the downside. So if I focus on the $25, that's how much I would get for selling this 25 put. Is it possible for me to get a similar break even, which this has a break even of $24.75? You can see that right over. I'm gonna shake my mouse here, right there. Break even $24.75. Can I build another trade that collects $25 and has a profit spike somewhere around here? And oftentimes with earnings, it's possible to do that. So what I can do is I can sell, and I can do 2 of these and then buy a 26 put. Now in this case, I'm getting a credit of 25 cents is the mid price. I'm still collecting 25 bucks, and my break even is 10 cents lower, but now I have a profit tent that's much, much taller. I could make an additional $50 off this if it was to drop down into this level. And this can be quite lucrative. So another thing we can do is we can widen out a little bit and then buy a butterfly spread and just have one extra short option. So in this case, I collect $33. My break even, again, slightly higher, $24.92. This is still massively down. Now I can make up to 100 bucks. I collect, 35 bucks. I actually have more potential to the upside, and my max loss is slightly greater. I've added $100 of max loss to this trade by doing this. If there's a spike down into this spike, I could actually make more money. If it goes to 0, I would lose more money. So I'm risking slightly more to potentially make more. And the big thing is my upside potential is so much greater, because if I'm getting $33, even though I'm paying a few more dollars in commission, I'm actually net greater than the $25 I would have by just selling that short put. So I like to do these complex trades because there's a benefit to them. There's potential of me making more money if it falls into this. I like this little trade. I'm gonna screen grab this. Is this button gonna work? No, nothing seems to be working on my Stream Deck right now. I don't know what's going on. My whole Stream Deck is just not working. Okay, and then can we look at some reboot? Yeah, I know. Sadly, it wasn't working, so I did a reboot right before I started, and this stream, which is why I was a couple minutes late, and it's still just not working. But we'll get through it. How would you play Apple with the recent pullback? Jamie's asking. Let's take a look at Apple. It is trading around 170, I believe. So we're gonna take a look at 170.09, down $5 today. I was looking at this yesterday. Again, I like Apple. A long time ago, somebody told me don't bet against Apple, And that has been very, very true for the last couple of years. Anybody that's been trying to short Apple has done not super well. But this recent pullback, we are seeing some definite downward momentum in this. If we look at the expected move, we've still got potential of it going up or down, because that's what expected moves do. They're a cone based on its current price. So the expected move is around 2% by this weekend. We've got 164 for next week, 163 down as far as 162. So again, let's take a look at building something similar where we have that ratio spread. Maybe we'll do a limited loss trade, because that is something that a lot of people like to look at, where we're risking a finite amount of money, even though it's pretty easy to take unlimited risk on the put side of Apple. On the downside, I don't mind doing that at all. I did have to roll an Apple position once for 2 years, but in the end it worked out very well. If we were to target this lower end, what if we were building some sort of bearish position? So I'm looking at the April 19th, 45 days out. What can I do here to potentially set up something that could make me some money? So this is the unlimited loss, or, well, it is limited, but the max loss is 15,792. That's about my break even as well. So this would make money as long as Apple stays above 157.92 if we have a setup like this. And this is very, very similar to what I just showed you on that Foot Locker potential earnings trade. The real money is it making enough money over these 45 days? In this case, it's not really. You're only collecting about $100. So you get this trade-off of having this nice tall profit tent, but you're only collecting $100. This is a good reason to not play the monthlies on Apple. There's enough liquidity on the weeklies that if we go to the 38-day expiration, there should be, and there isn't, there should be $1 wide strikes. So let's look at, okay, it's going to call me a liar. Why is there no $1 wide strikes on here? $2.50 wide on the 15th. $2.50 on the 22nd, but then only $5 on the 28th. 17 days. Let's see if we can set something up here that is just a slightly different trade, but similar, and see if we can get greater than that $100 that we need per month. This case is 17 days, so we would need to make 1% return. We need to make $160 in 30 days, which on a 17-day period means we have to make about $80. Again, we're a little bit short even with these wider strikes. A little bit less than ideal. Part of the reason is because I don't think anybody thinks it's going to trade down this low at 160. If we were to look out at that March 22nd, let's look at options AI again and see on the March 22nd, the expected move on Apple is only 163, not 160. And that profit tent that we were building was actually below the expected move. So let me just move all of these strikes up. I'm going to clear this and put the same trade on, a 131, but centered on the 162. So let me just do that. So we'll do 162, and I'm selling 3 of the 162s. That's how I like to set it up. Again, I'm looking for this $80 based on the amount of money that I'm total at risk. So $16,000 max loss on this trade. That is what I'm basing this on. I want to make at least 1% return monthly. So I need to make $80 in 2 weeks. This trade makes that just barely $76. It's on the very low end, but it makes that percentage if the stock goes up. And if the stock goes down, there's potential of making more if it falls into this little profit tent to the downside. So that's the way I like to trade those. Now we can also do a limited loss trade, which means we just buy an equal number of shorts or equal number of puts to the amount that we've sold. This gives me a much smaller profit or loss, but what it does is it gives me a spike that's almost double the height. I typically want to make about, you have to factor in commissions with this. So I want to make like a couple percent, at least 2% return on risk capital. on these trades. You can put a ton more of them on. They are limited loss. So in this case, there's only $230 in risk. Very easy for me to change this by just dragging out the 157. This will increase my risk to $700, but increases my credit collected to start the trade at $50. So now I'm making $50 on a $70 or a $700 risk with the potential of going into this profit spike. That spike set at the 18 delta. So there's a 82% chance that Apple will trade above 162. That's what we're looking at when we see this this value here. So the spike that would be, if it went to this lower range, it is definitely in the profit tent. If it goes to the lower range, anywhere above this, if it stays above 165, then it's a $50 return on a $700 risk. And these are very binary. So if the market does go down, then we lose the whole $700. So you have to take that into consideration. These can be quite good trades, but you have to trade them small so they don't just lose a bunch of money because you went all in on one trade. That's not the way to make money over time. What we do is we layer up and we take tons of these little trades. $50 on $70 in 17 days is a very, very good return with the potential of falling down into this little trap. Jimmy Traders wants to look at some quant ratings on Bitcoin ETFs. Absolutely, let's do that. And do you have some specifics in mind? I mean, I'm playing a couple right now. I've got Riot. There's the profitability in Riot is still an F. The growth is an A+. These stocks are all going to have fairly high risk. So one of the things that happens when there's high risk is we'll get high premium. If we look at Mara, profitability a D+. So quant rating here is a strong buy on Mara. Valuation is a C-. There's the two that I have been playing. What else? This is much less correlated to Bitcoin itself, but Square currently rated a strong buy by the quant rating. It is a profitable company. They're a little more diverse. They do have quite a bit of exposure to Bitcoin, but they also have their terminals. So Square is a very solid company. I also have positions in Square. What else do we have that I'm just trying to think off the top of my head, but would love for you to let me know, Jimmy, if there's particular tickers you want me to pull up. I will gladly pull those up. If you guys are looking for how to get these quant ratings, this is a paid subscription that I'm showing you. It is through Seeking Alpha. Absolutely has been a killer addition to my portfolio trading. Just that quick snapshot, being able to look and say, is the company profitable? What is the algorithm? What is the algorithm looking at? That algorithm seems to be very, very strong. These are great potential positions to put on. Of course, I don't always follow them. You can't just blindly follow. You have to use your own judgment. And usually if I go off of it, I'm wrong. Sadly, the computers are smarter than me. And they're getting smarter every day, which is why the big hype right now, the market just going up. Actually, that's a good point. We didn't even talk about what's going on in the market today. Let me jump into what's going on. We talked briefly about Powell and speaking tomorrow, but we didn't do a little market recap. The VIX, we're looking over the right-hand side, just above my head here. The VIX up today 7%, trading at 1443. This is still relatively low, but it is a nice little spike. If we were to look at the chart, let's just click through here. A little spike up. We did see an 18 VIX. These are the daily candles. 18 VIX we saw on February 13th, and a little bit of increased volatility leading into tomorrow's announcement. SPY trading at 507, tiny bit of a pullback, still very much above this recent trend. Every time it seems to hit this, this is the 20-day exponential moving average, and every time it seems to hit it, we seem to have a bounce. Some people use the 21 EMA. I've always used the 20. They're very, very similar, but that is the current channel that we're seeing. The market is bullish overall. The company's earnings have been fairly good. And a bunch of the Russell stocks, as I spoke about earlier, are still down on the year. There hasn't been a great performance there, but we were being propped up by the mega cap stocks. And Apple is down today. So some of those mega caps are contributing to this pullback while some of them are going up. SPX 5,077, down a full percent today. So, and of course, when we're down that much, this is when I put in my Black Swan hedges. So we did that this morning in my Patreon group. I definitely have some hedges on in this market because I feel like there is a potential risk here if the market really sells off. So I've been playing way more hedges than normal as this market has been moving up. If we look at the NASDAQ trading at 435, again, looking at that 21 EMA, this is a 20 EMA rather, the candle just coming and just about touching it. The NASDAQ is a little more volatile than SPY, as you can see. Oil trading at $78 a barrel has been kind of running up as of late. Pullback, little doji candle here, not a lot of movement on the day today. IWM up down 0.65%, so it's down the least of the big indexes, NASDAQ and SPY. What else do we have here? Gold trading at 21.41. This has been on a massive rally. That's fine. I don't need that. Massive rally these last couple of days. What's going on? Are people cycling in? Is this market maker cycling into gold in looking for a potential stock market crash? Who knows? And obviously these candles quite tall. These wicks are pretty big, but we are seeing a little bit of slowdown relative to the size of these bodies of these candles. I have quite a few gold trades on. We talked about this at length this morning in my Discord chat. So for my patrons, if you head over there, you can look at my notes and my positions on all of my gold trades. And as far as I'm concerned, they're doing very, very well, even though there's a little bit of pain right now. Natural gas, 195. We did see these lows earlier, about 2 weeks ago. We saw these lows, finally seeing a bit of recovery after, a fairly steep downtrend to the downside over the last little while. And then hogs trading at $85. These are some of the things that I've been trading. Hogs kind of leaning up over the last little while, a little bit of a pullback today. Overall, pretty good. I mean, I don't mind these volatility spikes. It's a good time to manage positions when, as an option trader, it's important to understand that there is volatility, expansion, and contraction. So when we're looking at any of these positions, these days where the candles go up are a great day to adjust positions. These days where the VIX is low, not such great days. So it's good time to put on lots of trades. What else are we looking at? If the mate is asking, if the stock price moves into the max profit zone at the expiration day, is it better to close it for some profit, or do you gamble and wait for expiration for maximum profit? If we're talking about like 131 trades, it really depends on where it is. So oftentimes, if we were to have what am I trying to do here? If we were, well, that's looking weird, isn't it? Let's do something different. You don't want to see me twice. If the stock drifts down and is slightly above the profit 10. So, okay, first of all, when I set up these trades, let me actually set one up again here, because I think it's important to understand where we're looking. Let me just pull up one of my trades so you guys can see one of my trades, and because I think that's kind of cool when we look at actual trades. What is going on? Where's my desktop? Just losing everything today. Bear with me for 1 second. I'm gonna pull up a stock and then we're gonna take a look at it. And yeah, this is a great little position to take a look at. Just give me 1 second longer. Okay, so we're looking at AMR, and here we go. So this is one of the trades that I have on. I opened this February 9th. Now this sheet that you're looking at is my rolling options record keeper. Now this, everybody that's a patron has access to this. All my option tier patrons have access to this sheet. They can see all of my open positions. There's a tab for every single one. I have like 130 something positions on right now, and they all kind of work together to create a cash flow. So this is a put butterfly. You can see I've got a long put at 330, a long put at 360, and then I have 2 short puts at 350. So it's very, very simple. I use my sheet to pull down, choose my strategy, and then my sheet prompts me to put my entries in. This one was entered for $1.95 credit. And let me just fix that. $1.95 credit. I did one of them. You can see the margin requirement or the max loss on this about $850. This is the cash allocated to the trade. It is a butterfly. It is limited risk. Means that if it does go against me, I could take maximum loss if held to expiration, $805. Now, these red lines represent where the stock is relative to where I opened it. So you kind of have to look over on the right-hand side, right above my head. There's this little bit that says stock price movement. February 9th, it was $30.70 a share. So that would be this left line. That's at 30.70.01. That's where the stock was trading when I opened this trade. Now, today, the current price is $3.72. So it's barely moved. And this is a pretty typical thing. So when I set this up, my expectation is I am going to make some sort of money relative to the amount of money that I'm risking. So I have $805 at risk. And if the stock stays where it is, which it looks like it is, I am going to be able to close this for a profit of $195. The $195 is the credit that I opened to collect this, to start this trade. These are all puts. Stock was trading at $3.70. And all of these puts, the $3.30, $3.60, $3.50, and $3.50, were all out of the money. I collected $195 for this trade. That cash was deposited into my account. If the market stays anywhere above 360, all of these puts will expire worthless. Now, this type of trade functions very well on or very close to expiration. So if on March 15th, which is currently 10 days away, the stock was to drift down closer to this 360, this profit tent becomes slightly curved prior to expiration. Depending on how aggressive I think the move is, I will close early. If it is still on the right side or the top side or the profitable side of the peak, I have no problem holding this further into expiration. If, especially on the last day, if the stock is trading on the downside, on the potential loss side of the trade, I am eager to get out of those trades earlier. These are both spreads. We have a bullish spread on the left, and it's slightly wider than the bearish spread on the right of this particular trade. So both spreads can be defended by closing early. We have less extremes if we close early. So it depends on where the movement is. If the movement is right at 360 or even slightly above, and I can get a small credit to close, and I don't think the market's going to go down, I just get out and take my credit. If I'm totally happy with the 195, which I should be, I mean, that's a 20% return on capital. Making $195 on an $800 trade is an extremely good return. I can just let that ride. If it's at the 360 and I think it might drop near the end of the day, I can let that ride. Really, it becomes on when it's on the far side of this trade, and that's when I start to get squirrely about getting out of the trade, even if it is in the profit tent, because these trades, if we're in a downtrend and there's been a significant move, they can really move quickly. And this bear spread or the bull put spread is wider and larger and moves faster than the bearish component of this trade. So there's a little bit of a tipping point once it hits that 350 mark. It really depends on the velocity. My hope is that it would just drift in. It would be very nice if it opened like at 360 in the morning on the 15th and then drifted down to 356 throughout the day. That would be awesome. I would be able to close this out for about $500. I would feel pretty safe about doing so and letting that happen. Rarely am I ever targeting this top spike. You know, the trying to target that is not realistic in any way, shape, or form. Really, with a setup like this, if I can make $100 more and make $300 on this trade or $400, that's still a 50% return on risk capital. It's a very, very good return. This setup can be quite lucrative in sideways moving markets when there is risk to the downside, like there is right now. So hopefully that kind of helps with some of the thinking around those types of positions. Steph wants to look at CLSK. Let's take a look at CLSK. And I'm just going to move that off of there. And then let's pull up CLSK on Seeking Alpha Clean Spark. So this is Clean Spark. Is this a full Bitcoin ETF? Is that what they are? Application software. Everything looks like it's Bitcoin. Peers, we've got CleanSpark, Kinaxis, Riot. Yeah, okay. So it looks to me like it is looks like it is a full Bitcoin ETF, where it has exposure to the cryptocurrency space, which obviously has been up a ton. Year to date, up already 520%. Wall Street analysts are rating it a strong buy. Quant rating will never give a strong buy to a company that's not profitable. So, you know, that is this quant rating is more important to me than what Wall Street analysts think it should be. The computers, again, are just smarter than we are. Stock up quite a bit, obviously, just like Riot and Mara. It looks like, you know, it was trading last year around that $4 mark. The lows are about $7. There will be a potential extreme move on these. So let's take a look at options AI and see what the expected move is on the option pricing over the next month. And then we'll take a look to see if there's any earnings coming up as well. So are there earnings? Earnings Wednesday, May 8th. So we have no earnings over the next little while, which is nice. The lowest side expected move for the March 22nd is about 1163. On a stock like this, I would tend to, you know, the stock, again, I mentioned around that $7 mark before, $7 or $8. I would tend to play fairly safe on these, and there's quite a bit of premium in a stock like this. So let's pull it up and take a look at what that looks like. You guys enjoying this? I hope you guys get something out of what I'm doing here. I mean, I've been doing this for a long time now. I quite enjoy interacting with you. So if you want to leave a like, that really helps me a ton. It just helps the algorithm, and leaving a comment, just letting me know where you're watching from, things like that, really helps as well. So any typing you can do is appreciated. The CLSK, if we look at this 12 mark here, even the 10 level, I think that's where I would be looking at setting my break even based on this chart. That way, if the stock has to drop 33% before I am in a terrible spot on it, or potentially rolling or buying or whatever it is that I'm doing. So let's take a look at how much premium there is, because there's going to be a ton in these. Just going to go out. Let's just play the weekly, 10 days. I'm going to look at the 10. So from a return on risk capital, again, that trying to look for that like 11 or 1% usually is what I want to get on a short put. There's only a 4% chance that it's going to trade under $10 according to the current delta. We know that is unrealistic based on that chart. If Bitcoin sells off, this could easily go down to 10 from 15, just based on the previous pricing. So what I might do with this is say, what if I sell multiples and then buy one? So I have some sort of ratio. There's the 10. This is going to be a break even that's really low. Break even's at 905, but I'm not going to get any credit to open this. So it's not a great trade. I'm basically making $3 and paying $3 in commissions. So that doesn't work for me. So what I'm going to do is I'm going to move up and see what can I do. Can I be a little more aggressive and still get a decent trade on? This is going to collect $8, still not very good. Nice tall profit tent. So this is where we start to get, into sizing. We say, okay, what if I was to do like a 3-to-1 ratio? Now I'm getting a 15% or 18 cents to open, which is more than 1%. This is a 10-day trade, no earnings, huge profit spike to the downside, and a break-even rate around $11. So, and this would be a break-even buying 200 shares. We have to keep that in mind as soon as we go to that 3-to-1 ratio. So this is March 15th, and $11 would be the break-even. So just right around there. And if we were to look on that on the chart, $11 below this recent moving average where there's a gap. So if this does continue to drop, this gap could fill quite easily. Again, these are all related to Bitcoin prices. So these stocks are moving relative to Bitcoin prices, not by stock valuation. It's the Wild West, so to speak. Jimmy Traders, BTCXB. Let's take a look. What other tickers? What else are you guys trading for Bitcoin stuff? I don't know if this one's going to be there, but BTCX.B. Galaxy Bitcoin ETF. Is this really Canadian? All right. Well, this looks like an actual Bitcoin ETF. So this is not a company that's mining. This just looks like an ETF. Canadian stocks, not a lot of use here on Seeking Alpha. So unfortunately, not seeing much. Obviously, it has been moved up with the Bitcoin prices. If you're bullish on Bitcoin in general, this is a great way to get exposure. I mean, it's $12. You can buy Bitcoin, Coinbase or something. You can buy this at Questrade for $12. It does move up with the price of Bitcoin. So I don't think for me, people ask me about this all the time. I'm a pretty conservative investor in general. I like to hold index funds. I like to use covered calls against my long stock positions. I'm trading less dividend stocks than I used to, but I'm always looking at that, smooth and steady return. That's what I want. I have exposure to Bitcoin, Ethereum, Dogecoin, a couple of other things. I have been buying those for years. I don't think as an investor, it would be smart of me to sit on the sidelines and not take positions in those. This year, 2024, definitely we're seeing more investors taking on that exposure because of these ETFs that are coming out that are becoming available. So institutions are starting to be able to push that out to their customers. I think this is attributing to the upswing in Bitcoin in general. I do see continued upside in the cryptocurrency space, especially with Ethereum-based tokens and how they're going to be integrated. I believe in the future we're going to see all, what was that? What did I read the other day talking about titles, like land titles? We'll have like a cryptocurrency, like a blockchain technology underneath it. So when you have buy a piece of property, it's not just like the deed, like the title that's registered at the office, but you actually have an actual numbered blockchain that is associated with movie tickets, concert tickets, anything that can be purchased and tracked. Can have a blockchain applied to it. And I think that this technology, as it comes out of its infancy, which I still believe it's in its infancy, will start to become more mainstream and should swing up, which is why I have a small percentage of my holdings put towards these cryptocurrencies. That's just kind of how I'm operating in this space. Just in general, I don't think I want to sit on the sideline of something that could potentially go up. I see big shooters asking about Surge. So Surge pays. Strong buy. What is this? Okay, well, there you go. So this is wireless telecommunications services. I have no idea what this is. Ranked in industry 4 out of 19. Never heard of this. Thanks, big shooter. Appreciate it. 678. I really love when I see a quant rating with strong buy. We got a good valuation, growth, profitability, momentum, and revisions. Just A's across the board. Everybody seems to be commenting that it's a buy. Wall Street thinks a buy. SA Analysis thinks the buy. 1 year is up 44%. On the 5 year, we're way down from a $40 valuation back in 2019. Has been trading rather static the last little while. Let me see if there's any option premium in this because those are always the types of things that I am looking for, these types of trades. Why can't I take today? This is one thing I wish that worked a little bit better. You can see how much I'm struggling with interactive brokers in this particular type of thing where you like typing and it just doesn't come up. March 15th, that's a huge number. The 750, 10 cents. 10-cent credit for the 750 call. Was there earnings? What's going on? Let's look at this over on see, this is so great. When I type in the ticker and hit enter on Options AI, it just functions. It just goes for it. But in IBKR, I have to like hit enter and then mouse around, and I lose it half the time. Thursday, March 28th is earnings. Expected move 24%. So big move here. 584 is the expected downside move. 774 the expected upside move. You know, collecting 10 cents on that by this weekend is crazy. 45 days out, that 750 is worth 45 cents. So buying the stock today and selling the 750 nets you a bunch of extra shares. So here's how I would do this math. If I was looking at a position, I would say I wanted to go long this stock. I could buy a stock leg here. So I'm paying $679 to buy 100 shares, and then I'm selling the 750 call. So I'm simultaneously agreeing to sell my shares for $7.50 a share, which there's a chance that they could go up that high. The likelihood of it going much higher than that is not very great, but of course could be earnings. There are earnings at the end of the month, and this is April 19th. So there's lots of premium there. If it did go up to 750, this trade would cost me $620 and could make up to $116 if it went to that max profit zone. That is a fantastic return on capital. Let's just say it doesn't move though. What if it just stays at 677? This trade would still make that $45. So $45 return, if we now pull up a calculator and take a look at the calculator, a non-movement, $45 divided by 625. So 7% return in 45 days. Extremely lucrative. Now, what if it goes down? That expected move is 550, right? So could lose $85 from a $625 investment. So if we go 85 divided by 625, it could lose 13%, or it's expected to trade somewhere in between a 13% loss and a 7% gain. And how do we add safety to this? Well, there's a couple things we could do. We could buy more shares and sell more calls. That would give us a much more delta neutral position. So we could say like buy 150 shares and we could sell 2 calls. This is going to give us some naked risk to the upside, but you're going to see that it's actually pretty crazy far out there. So let's just put a bigger move in here, and let's see, what if it was a 60% move? Even if this stock went to $10, it's still profitable by using this ratio of having some more shares than less. And we can really micro adjust this to whatever profit profile we want. If we did like 180 shares, we're still going to have a 10 to one side. But now the stock could go up substantially and I would still make a return on capital. And this is a bigger trade because I'm buying 180 shares. But that's one way to adjust the delta curve on these. So you can have slightly more potential profit if the market doesn't move. In this case, this trade would make, if the stock didn't move, it should make about $80 over that from 677. Why is it not showing? This is over. Should be making about $80. It's obviously the spreads are pretty wide on this. It's not showing what my actual fill price would be because I've got 2 short calls. If they both fill for 40 cents each and then expire worthless, and then the stock doesn't move, if it's trading the exact same price, 677, then all that's happened is the decay is $80. This profit trade is actually showing a little bit low because if you go to the 677, it's showing it would only be a $39 return at at expiration, when it would be $80 of extrinsic value gone, not 39. So the profit tempt is slightly off. This is where using my RORC would give you a more accurate result based on the actual fill price that you're getting, not just some estimated ask price that it's calculating this off of. Then you can see the bid-ask spread is pretty wide. So that's one way to adjust those deltas, is to just buy some extra shares. The other thing we can do is, let's just clear this off completely. What if we sold the downside? If we went to the 5 strike. Now, 5 strike is well below the expected move. There's not a huge amount of premium in it, but it still might be worthwhile. Let's take a look. So if we add the stock leg, the first thing we need to look at is just what it looks like with the with buying 100 shares. And in this case, it's actually showing a negative return. That's because it's assuming that we're going to pay $5.26 to open this trade. In this case, the debit to open this, the spread would have to be pretty wide. What I would look at is making sure that I get filled for no more than $4.85. If I could do that, I would have $15 in extrinsic value on a $470 or $485 trade. And again, if we do that math on our calculator, the reason I'm pulling that up, that 15 divided by 485, because that's how much it cost me to get into the trade, 3% return. That's what I would look at for something like this. May not be possible with this strike because that 5 is so far away. There's currently only a 12% chance that it could trade as low as $5. And looking at that chart in the past, that $5 level way down here, there's a bit of support here and quite low relative to where it is. Maybe better opportunity if this continues to pull back a little bit, especially if it gets closer to one of these lower moving averages like the 200-day moving average. Hi, Frank is asking, what is the symbol for Mini SPY? Okay, so there are, let's zip over to, let's go to Yahoo Finance. I think that's the easiest place. So SPY. When you say Mini SPY, you're just talking about like low shares or like lower price shares. So SPY is one of the most commonly traded SPY ETFs available. Now, if you look at the expense ratio right here, I want you guys to focus on this. This is 0.09%. And so the calculation on that is if we had $1 million in this account, where's my calculator? So let's just load up $1 million because it's a nice round number that we like, $1 million. And if we were to pay 0.0009%, this is going to cost about $900 a year. Does that seem right? Seems right on $1 million. That's what the fee is. Let me just do that math one more time. We've got $1 million, and then times 0.00, and then 0.09%. $900. That's cost of holding $1 million in SPY. So really, really low cost holding these index funds. The idea is that there's no work for the brokerages. Now, I don't trade SPY very often. I much prefer SPLG, and I'll show you why. So first of all, it's $59. So I can hold, if I want to sell covered calls on this, and typically with a long stock position like this, like SPLG, what I want to do is periodically, or maybe all the time, reduce my exposure to the market in general and try to collect some extrinsic value, but they want to be long holdings. So I want something that I can add to and I can be flexible with. Having lower cost products is great. I only need $5,948 right now to buy 100 shares of SPLG. Comparatively to the SPY, I would have to have $50,000. So in an account that's like, say, $20,000, I could have almost 4 contracts with different strikes, different covered calls. Whereas in a $20,000 account with the SPY, I couldn't have any. I couldn't have any covered calls at all. I could have no risk reduction. The crazy thing about SPLG is its expense ratio is actually even smaller. It's 0.2%. Now we did that math, 0.09% was $900 on $1 million. This expense ratio is 0.02, which means it's $200 per million. So not only do we have a lower expense ratio on the long stock that we're holding, we have a lower price point, and it's got fairly decent liquidity in the options profile. So that is one of the things that I look at. So I hope that answers your question, Frank, for a mini SPY. You may have been asking about something else, like if we look at SPX, obviously, is a cash settled index that tracks the S&P 500 directly. So these, you can't actually own the index, SPX, but we can trade options on it. 5,064. There is another one in here, and if I just add it in, let me just insert a row here, and I'll add it in. There is a mini version of this. It's also cash settled, and it's XSP. And you'll notice that this is actually the same ticker as a Canadian hedged position of S&P 500 tracking on the TSX. So a little bit of confusion there, especially for my Canadians out there that follow me. I often will talk about XSP as an ETF that tracks the S&P 500, but in this case, I'm talking about XSP on the NASDAQ, which is the index. And you can see it is trading at exactly 1/10 of the size of SPX. And again, this is cash settled options only on this type of index. Very, very easy to trade and very, very liquid. Both XPS, SPX, and SPY, all very liquid. SPLG, a little less liquid. So what I do is I play, there's my buttons not working. I play SPLG in a covered call scenario. So I'm not doing complex strategies anyways, because if I don't have enough liquidity for options trading, what happens is I get poor fills. If I get poor fills, all of the pricing, the difference between every strike that I'm entering is contributing to reducing my potential profits. So when I have a product that I know is not very liquid, like SPLG, I don't play complex options. I just very simply own the long stock, sell a put. That's it. That's the strategy. Super simple, and it works. So hopefully that answers your question. Let's get some more questions in here. It's 12:01. I'm feeling pretty good. So let's do like 5 more minutes. If you guys want to let's throw 3 more tickers at me. I'm just going to type them into the quant rating really quickly. We're going to finish this on a high note. We're going to take a look at 3 stocks of your choice and see what it is that what the quant rating is. So let me know. Fastest to type, we'll get it here. Ready for your typing. Got how many people online? 19 people. And thanks for the likes, by the way. I got 8 likes today. SMCI, well, SMCI is still a strong buy rating. It's crazy. We're at 1,045. There's the quant rating strong buy. This is one of the alpha picks from Seeking Alpha, has had an absolutely incredible return. I think the target on this right now, and a couple of groups, I mean, one of the guys is targeting $1,200. SMCI has been a strong buy for a very long time and continues to stay on there, even though the valuation has moved into this D- zone. Kind of scary to buy a stock at these valuations, because when the pullbacks happen, they can be rather quick. Like if we look at the year to date on this, these moves from 1,000 down to 700, that's a 30% reduction right there. That little tiny move between February 15th and February 21st. Then it went back up to 1,000, then it went back down, lost 20% of its value. So we saw 30% drawdown, 20% drawdown already twice. Is that going to happen again? Could very easily. Tesla, yes, mate. Let's take a look at Tesla. Something happened in Germany today. I don't know what exactly it was. We're having the 1-year chart, we're down 7%. Year to date, we're down 27%. If we look at just the last 6 months, we've been definitely in a downtrend. Today being kind of this similar to these low periods that we've seen. So in January, let's just look at the year to date here, just to see a little bit of consolidation. We've got 182 back in January 25th. Then we saw 181. 184, and now today breaking down that triple bottom. So seeing a little bit of revised move to the downside. Now, is this just in preparation of tomorrow? It could be. This could just be people cycling out, market makers doing a little bit of manipulation. It's really hard to say with stocks like this. This is one of the most traded stocks on a daily basis. Their volume is absolutely massive. So 82 million shares traded on a daily basis here, 99 million And we saw a huge volume, 200 million shares traded January 25th. Valuation's an F. Profitability is an A plus still. Tesla is making money. So I like Tesla long term. I don't like this price action. It's a bit sucky. But long term, I like it. NVIDIA and then Costco earnings. Yeah, let's take a look. NVIDIA, again, valuation is the scary part in these. Quant rating is now a hold. Valuation is a full F. It's obviously has massive growth, profitability, momentum, and revision. Stock has been an absolute tear. Year to date of 71% in the last 7 weeks. No, sorry, we're into March. 9 weeks. Been just an absolute barn burner here to the upside. A quant rating is currently a hold. I would be leery about adding 2 positions in NVIDIA. I think playing neutral here is the smart move in that I currently have no positions in NVIDIA. Just don't like to play things that have gone so crazy. And then Costco, let's take a look at Costco. Valuations in F also had a massive year. 1 year up 61%, year to date up 15%. Just go, go, go. If you've been in a Costco in the last couple of years, this year or last year, whenever, every time I go to Costco, I was there yesterday. It's like absolutely mental how busy Costco is in general. It's just like people just are scooping up stuff. It's pretty wild. Obviously massively profitable with that A plus rating. The growth is a B. There was some like union stuff happening last year. I think that's all kind of baked into the stock price now. Stock's trading at 762, and we will take a quick look at Options AI just to see the expected move. Again, Options AI, there's a discount code. This is not a very expensive service month to month. So if you're looking for a very, very quick way to make picks, and you haven't already joined my Patreon, where's my button here? Let me promote Patreon for a second. Obviously my Patreon allows all of us to just take a look at the stocks on a daily basis, look at trades, talk about the trades, potentials, pull up all of this information every day. So you don't have to wait for these Tuesday live streams. Members also get access to the Thursday stream as well. So I pack a ton of value into my Discord on Patreon, and I try to make it as reasonable as possible so that people can join, learn some things, and come in and out as they please. It is a month-to-month subscription. It's pretty awesome. I feel like I offer more services than anybody else that is out there doing what we're doing. Everybody that has come across my path, I am far exceeding in providing information, trade ideas, back testing, records, 24-hour access to all of my trades, all that stuff. It's like super transparent. I mean, I really put out everything I possibly can. It's taken me years to get to the level where I am, and it's been pretty awesome. So if you're thinking about it, it is well worth it. Let's go back to this Costco chart here. The expected move, March 8th. Let's look at the earnings. Thursday, March 7th. So that'll be Thursday afternoon. The expected move is 4.5%. So it's 723. I tend to look a little further back. So we're looking at this like 711, 705. If I was playing this, I would probably play on the March 15th, and I would look at that even as low as 700 level for the downside and see if I can make some money on this doing a limited loss trade, because it's a big product. So unless you're really wanting to own $70,000 position in Costco, then it's probably a limited loss that you're doing. I'm gonna do Costco here and hit enter and try really gingerly to get this in the first time. So, and again, you can see why I would want my break even around that 700 or around the 50-day moving average. If we pull this chain up, let's just do it quick. I'm gonna look at the March 15th, not this week, I'm gonna look at the March 15th. And I want that 700. So if my break evens is 700, then what I might do is I might build slightly higher than that. So this is a 14% chance of getting to the 705s. And it might be as simple as just doing a very, very simple butterfly. 90 cents, about $45 mid price on this. So make $45. This is a $500 trade. So if I can get $45 to open this trade, then this reduces this potential loss to $450, which means that $45 is a 10% return on capital. So make 10% if the stock does not go down. I can probably tighten this up a little and get an even better return on capital. This is going to increase my risk and decrease the amount of profit tent there. I'm going to blow this apart here. Let me just do like this. So same sort of thing. I've got, this is a broken wing condor, profit profile. I've got, this is only $270 in risk, and I've got about a $20 credit to open. The mid price on this is about 20 bucks, $18. So what I would do in this case is just widen this spread just slightly, not that far. I'm looking for that $500 mark. So this is a $700. Oh, that's why that did that. Okay, let me move this. Looking for $500. So I'm trying to build a $7.75, $7.50 wide bull put spread and a $2.50 wide bear put spread, and see what kind of credit I can get. This trade opens for 36 bucks, so a little tiny bit on the light side, but there's a nice profit tent where you can make 250 bucks with a max risk of 500, break even at 695. So I could even be potentially a little more aggressive with this trade, and we can play with these a little bit. What I'm really looking for is, can I get that 750 and get a decent credit to open? Yeah, there we go. 50 bucks. So $50 on a $485 risk. So I make 10% return, and I have this small profit tent where if it falls down between 702, 750, or 702 and 705, I could make up to 265 bucks. 87% probability of profit. The break-even's right at 700. Love this trade. Okay, you guys are great. I'm going to push this button that says, what does the button say? Does anybody know? It says, let's get rich together. That is not what I wanted it to do. I wanted it to be here. Let's get rich together. That's what we're trying to do here. Again, if you want to reach out to me, send me an email, hit me up. I try to respond to all my social media. So I am more than happy to answer any questions you might have. And you guys are fantastic. Thank you very much. Take care. See you soon. Now I got to find my button. Where's my end stream? Bye.